Well, 2015 has been a big year so far for initial public offerings, and it's about to get even bigger. The long-anticipated debut of Chinese internet company Alibaba was recently announced, and it's likely to be the largest IPO of all time. In this morning's U.S. Bank Economic 360, U.S. Bank Vice President and Portfolio Manager Mike Denneman joins Business Courier editor Rob Dahlmeyer in the studio with some insight on Alibaba. Mike and Rob.
Peg, thanks. Mike, thanks for being here.
Morning.
Alibaba's not a household name in the United States, so let's start with this. What is it, and what does Alibaba do?
Sure. Well, it probably isn't a name that's familiar to many Americans, but it is certainly a household name in China. So, at base, it's an e-commerce company. It's often described as a combination of eBay and of Amazon because it has the eBay type component where users sell to one another, and then the Amazon type component where retailers sell to consumers. And then throw in a search engine, throw in some business to business, throw in a PayPal-like component, and what you end up with is an absolute internet giant. So just to put that in some perspective, it's estimated that 4 out of every $5 that the Chinese spend online goes through Alibaba.
Wow. How big is the IPO going to be?
Well, huge in a nutshell. Anytime a company this large comes to market, it draws a lot of headlines. Even more so because Alibaba has decided to list shares on a U.S. market. So, we won't have more firm numbers until we get additional data from the company, but it's likely, as Peg said, to be the largest IPO of all time. So currently, the record holder is Visa, which came to market in 2008, raising $20 billion. Everyone, of course, recalls the Facebook IPO of just a couple years ago where they raised $16 billion. So all we have to go on right now are estimates of Alibaba's value, but analysts suggest it could be worth between 150 and 200 billion. So even if they sell only a fraction of those shares to the marketplace, it's going to be very big.
So American investors know, they understand Amazon, they understand eBay. What should they understand about this if I'm interested in investing?
Sure. Well, the first thing to understand is that there's going to be a lot of hype, and with hype comes a lot of demand. So I think, as is oftentimes the case with very popular IPOs, that unfortunately it's going to be tough for the average investor to get shares prior to coming to market. So the question then becomes, do you buy shares right after they're offered and hope that they continue to appreciate, or do you wait for all of the excitement and hoopla to die down and then pick them up later? I think we saw clearly with Facebook, for example, that all the hype isn't necessarily a positive thing. All of that comes with one big caveat, and that is for shareholders of Yahoo, the U.S. internet search company, which owns about 40% of Alibaba. So they stand to have a pretty big payday when the shares come to market. So if you're a shareholder currently of Yahoo, you are already indirectly a shareholder in Alibaba. So that would be one way for American investors to get access to the shares right away.
I got on the site for a second the other day after this happened, and of course it's in Chinese, so I quickly got back off. But does it look just like Amazon?
It doesn't. From what I understand, they keep the web page itself intentionally cluttered because Chinese consumers are used to dealing in a marketplace. They're used to haggling. They're used to going back and forth over price. So the web page itself doesn't resemble what you or I would expect to see on an eBay or an Amazon. It's much more busy, so to speak.
But it works for that market.
Absolutely.
Great. Hey, Mike, thanks for being here.